Customs Administration Order Number 1-2019. Introduction. This order implements A. The post-clearance audit functions of the Bureau found in Section 1000-1006, Title 10, and B. Other related provisions of Republic Act 10863, otherwise known as the Customs Modernization and Tariff Act or CMTA. Section 1. Scope. This order covers 1.1. The post-clearance audit of all records required to be kept by all importers, beneficial or true owners of imported goods, customs brokers, agents and locators as provided for in Section 1003 A, B, and C, Title 10 of the CMTA. And 1.2, the Prior Disclosure Program or PDP as a compliance and revenue measure. Section 2, Objectives. 2.1, to prescribe the principles, purposes, and methodology of the post-clearance audit system, record-keeping requirement, and the period covered by the conduct of audit. 2.2, to provide guidance for record keeping, document retention, and other legal obligation of importers and other customs stakeholders and the adverse consequences of non-compliance with customs rules and regulations. 2.3, to facilitate trade by strengthening customs controls from the border to the back end of the cargo clearance process under a regime of informed compliance. 2.4, to promote compliance with customs laws and regulations by providing a non-punitive facility for importers to voluntarily disclose or report to customs authorities the errors in goods declaration and in the payment of duties, taxes, and other charges. 2.5, to provide a clear set of policies and guidelines in the application and availment of the PDP. And 2.6, to generate additional customs revenues with the least administrative cost to both the government and the importer.
Chapter 3, Definition of Terms. For the purpose of this CAO, the following terms are defined as follows. 3.1. Customs broker shall refer to any person who is bona fide holder of a valid certificate of registration or professional identification card issued by the Professional Regulatory Board and Professional Regulation Commission pursuant to Republic Act 9280, as amended, otherwise known as the Customs Broker Act of 2004. 3.2. Customs clearance shall refer to the completion of customs and other government formalities necessary to allow goods to enter for consumption, warehousing, transit, transshipment, or to be exported or placed under another customs territory procedure under the following customs regimes. Section 3.2.1, Customs Clearance for Consumption Entries, shall refer to the procedure of making the final payment or duties and taxes and other charges at the port of entry and the legal permit for withdrawal has been granted. So Section 3.2.2, Customs Clearance for Warehousing Entries, shall refer to the procedure of filing of goods declaration and the duties and taxes have been secured to be paid at the point of entry and the legal permit for withdrawal has been granted. Section 3.2.3, Customs Clearance for Transit Entries, shall refer to the customs procedure under which good in its original form are given permit to be transported under customs control from another customs office to another or to a prison. Section 3.2.4, Customs Clearance for Transshipment Entries, shall refer to the customs procedure under which goods are given permit to be transferred under customs control from the importing means of transport to the exporting means of transport within the area of one customs office, which is the office of both importation and exportation. 3.3. Fraud shall refer to the commission or omission of any act resulting in material false statement, such as but not limited to the submission of false or altered document in connection with any importation knowingly, voluntarily, and intentionally done to reduce the tax and duties paid or to avoid compliance with government regulation related to the entry of regulated, prohibited, or restricted goods into the Philippine Customs Territory through misdeclaration, misclassification, or undervaluation. 3.4 Pre-zone shall refer to the special economic zone registered with the Philippine Economic Zone Authority or PEZA under Republic Act 7916 as amended duly chartered or legislated special economic zone and pre-ports such as Clark Pre-Fort Zone, Poro Point Pre-Fort Zone, John Hay Special Economic Zone, and Subic Bay Pre-Port Zone under Republic Act 7227 as amended by Republic Act number 9400, the Aurora Special Economic Zone under Republic Act number 9490 as amended, the Cagayan Special Economic Zone and Pre-Port under Republic Act number 7922, the Zamboanga City Special Economic Zone under Republic Act number 7903, the Pre-Port Area of Bataan under Republic Act 9728, and such other pre-port are established or may be created by law. 3.5 Importer shall refer to the following. 3.5.1 Importer of records or consignee, owner or declarant, or a party who a. Imports goods into the Philippines or withdraws admitted goods from the free zone into the customs territory for consumption, or withdrawing files a claim by free fund or drawback, or transport or stores such as good carried or held under security, or b. knowingly causes the importation or transportation or storage of imported goods referred to above, or the filing of refund or drawback claim. 3.5.2 A person ordering imported goods from a local importer or supplier in a domestic transaction if a. the person placing the order control the material terms and condition of the importation, b. the person placing the order and the importer or supplier are related in such a way that the former may be considered as the beneficial of the true owner of the imported goods, as may be exemplified by the following circumstances. I. The person placing the order is the sole buyer of goods imported by the importer or record. 2. The importer or record is an affiliate of a judicial entity which placed in the order, or number 3. The importer or records and the entity which placed the order are owned by the same set of majority stockholder, whether nominal or beneficial in both corporations. C. The person or entity placing the order furnish the importer or the exporter with technical data, molds, equipment, other production assistant material components, or parts with knowledge that this will be used in the manufacture or production of imported goods or the goods to be imported. 3.5.2 A person who's actively required the filing of goods declaration, or 3.5.3 an agent of an importer as described in section 3.1 or this CAO. 3.6 Inadvertent error shall refer to the mechanical, electronical, or clerical error committed unintentionally by the importer and occurred notwithstanding the maintenance of interval controls necessary to avoid such errors. Inadvertent error as used in the CAO amounts to simply negligence. 3.7 Locators shall refer to a person authorized to bring imported goods into free zones such as the Special Economic Zone and Pre-Ports. 3.8 Misclassification shall refer to the use of insufficient or wrong description of the goods, of the use of erroneous tariff heading, resulting in deficiency between the duty and taxes that should have been paid and the duty and tax actually paid, in or to avoid compliance with government regulation related to the entry of regulated, prohibited, or restricted goods in the Philippine Customs Territory. 3.9 Misdeclaration shall refer to the false, untruthful, erroneous, and inaccurate declaration as to quantity, quality, description, weight, or measurement of the goods, resulting in deficiency between the duty and tax that should have been paid and the duty and tax actually paid, or to avoid compliance with the government regulation related to the entry of regulated, prohibited, or restricted goods into the Philippine Customs Territory. 3.10 Negligence shall refer to the failure to exercise reasonable care and competence through an act or acts of omission or commission in ensuring that the statement made is incorrect, resulting in deficiency in taxes and duties paid. 3.11 Principal place of business shall refer to the headquarters that holds the senior executive of a firm, and it's usually the center from where other locations are controlled. It likewise refers to the place where a corporation officers direct control and coordination the corporation activities and where the books and records are kept. 3.12 Prior Disclosure Program shall refer to the program based on international best customs practice, authorizing the Commissioner of Customs to accept as potential mitigating factor prior disclosure by importers or error and omission in goods declaration resulting in deficiency in duty and taxes on the past importation. It may also include disclosure on royalties and other proceeds of any subsequent resale, disposal, or use of an imported goods that accused directly or indirectly to the seller. 3.13 Post-Clearance Audit Group shall refer to the office created under Executive Order 160/2003 as amended by Executive Order Number 46 in 2007, mandated to conduct audit or importers, locators, and all parties engaged in customs clearance and processing. 3.14 Reconsideration of audit findings shall refer to the plea for the re-evaluation of audit findings on the basis of existing record without the needs of additional evidence. It may involve both a question or facts or law or both. 3.16 Undervaluation shall refer to the situation when the declared value fails to disclose in full the price actually paid or payable or any dutiable adjustment to the price actually paid or payable, or when an incorrect valuation method is used or the valuation rules are not properly observed, resulting in discrepancy in duty and tax to be paid between is legality determining as the correct value against the declared value.
Section 4. Requirement to keep records. 4.1 Audit and examination of records. Paragraph 4.1.1 Within 3 years from the date of final payment of duties and taxes or customs clearance, as the case may be, the Bureau may conduct an audit examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declarations, documents, and electronically generated or machine-readable data, for the purpose of ascertaining the correctness of the goods declaration and determining the liability of the importer for duties, taxes, and other charges, including any fine or penalty. Paragraph 4.1.2 Period of limitation. In the absence of fraud and when the goods have been finally assessed and released, the assessment shall be conclusive upon all parties 3 years from the date of final payment of duties and taxes or upon completion of the post-clearance audit. 4.2 Entities required to maintain and keep records. Paragraph 4.2.1 Importers. All importers, including those mentioned in the definition of importers insofar as the application of post-clearance audit and Section 1005, Title 10 of the CMTA are concerned, are required to maintain and keep all records of their importations, book of accounts, business and computer systems, and all customs commercial data, including payment records. Paragraph 4.2.2 Customs brokers and other parties. All customs brokers and other parties engaged in customs clearance and processing are required to keep manual and or electronic copies of the records covering transactions that they handle. Should electronic copies of records be maintained, the record keeping must be compliant with applicable laws, rules, and regulations on electronic data. 4.2.3 Locators. Locators are required to keep records of all transactions and activities relating to the admission and withdrawal of goods from the free zone into the customs territory. 4.3 Purposes of keeping records. The record shall be kept for the following purposes. 4.3.1 To confirm the truthfulness and accuracy of the goods declaration and the transaction value of the imported goods. 4.3.2 To check the adequacy and integrity of the manual or electronic system or systems by which the required records are filed, maintained, and stored, whether specific transaction-based or account-based. 4.3.3 To determine the level of compliance of importers, customs brokers, locators, and other parties required to keep records herein with laws and regulations which are enforced by the Bureau, whether or not such regulations were issued by the Bureau, and lastly, to serve as basis for the imposition of sanctions for non-compliance on record keeping and non-compliance of regulatory obligations of the importer and the other entities required to keep records, subject to applicable laws, rules, and regulations. 4.4 Period and place to keep records. Importers, as defined herein and in Section 1003 of the CMTA, are required to keep all records pertaining to the ordinary course of business and to any activity or information contained in the records required by the CAO and by the CMTA at their principal place of business for a period of 3 years from the date of final payment of duties and taxes or customs clearance, whichever is later as the case may be. All parties engaged in customs clearance and processing, as well as locators or persons authorized to bring imported goods into free zones, are required to keep records related to such customs clearance and processing at their principal place of business for a period of 3 years from the date of filing of the goods declaration.
Section 4.5 Records required to be kept. The following records or their equivalent document are required to be kept for the purpose of post-clearance audit. 4.5.1 Documentation on the entity organization and structure, which includes a. Articles of incorporation or articles of partnership, registration certificate with the Department of Trade and Industry and the like. B. List of incorporators, stockholders, partners, board of directors, and owners. C. Organizational structure. D. Management and key personnel involved import processing including authorized declarant and their specimen signatures. E. Capital composition. F. Stock and transfer book. G. General information sheet. H. Information on the parent company and subsidiaries, affiliates, and their capital composition. I. List of exporters, suppliers, and nature of relationship with importers pursuant to Section 701, subsection C, Chapter 1, Title 7 of CMTA. J. Audited financial statement and tax returns for income tax, withholding tax, value-added taxes, excise taxes, documentary stamp tax, and capital gains tax. K. General contracts and agreements with regular or principal suppliers. L. Company profile or history and description of operations. M. Relevant board resolutions. And N. Permit and licenses. Section 4.5.2 Documentation on order and purchases, which includes a. Sales and other related agreements in whatever forms, including those covering distribution, royalty, agency, warranty, terms of payment, and the like. B. Correspondence and communication relating to the import transaction in whatever form, including purchase orders, vouchers, confirmations, pro forma invoices, acknowledgement receipts, notices, advisories, and the like. And C. Product descriptions or specifications such as brochures, manuals, catalogs, pamphlets, flyers, and literatures. Section 4.5.3 Documentation on shipping, importation, exportation, and transport, which includes a. Goods declaration and proof of payment of duties and taxes. B. Commercial invoices, non-commercial invoices, and or consignment agreements. C. Imports and or export licenses or permits. D. Bill of lading, master airway bills, house airway bills, and or consolidator bills of lading. E. Shipping instruction and or freight forwarders instructions. F. Certificate of origin, certificate of eligibility, certificates of inspection and loading and or certificate of identification. G. Freight and insurance contracts. H. Packing list. I. Transshipment permits, boat notes, and or special permits to transfer goods from one customs territory to another or from one vessel to another. J. Quota allocation and or certificates. K. Customs brokerage, logistics, or freight forwarding agreements, billing, statement of account, and or receipts. L. Receipts of arrastre charges, cargo handling and storage fees. M. Short shipped and or bad order reports. N. Goods tally records or its equivalent. O. Letters of credit and application for letter of credit. P. Offshore monetary transactions or remittance advice. Q. Credit card transactions. R. Telegraphic money transfers. S. Evidence of payment by any other means, including information detailing non-cash compensation transactions. T. Permit to operate customs bonded warehouses, customs facilities and warehouses and free zones. U. Formula of conversion or manufacturing. V. List of monthly importable materials or quota. W. List of imported purchases. X. Summary of exports or local sales. Y. Summary of liquidated or unliquidated entries. Z. List of subcontractors. Formula of conversion or manufacturing. V. List of monthly importable materials or quota. W. List of imported purchases. X. Summary of exports or local sales. Y. Summary of liquidated or unliquidated entries. Z. List of subcontractors. AA is list of inventory. BB is production report. And CC is evidence of incentives enjoyed by the Board of Investment Registered Importers and Free Zone Locators. Section 4.5.4 Documentation on Manufacturing, Stock, and Resale, which includes A. Inwards Goods Register or Receipts Journal. B. Stock Register or Inventory Record. C. Production Record. D. Costing Record. E. Purchases Book. And F. Sales Book. Section 4.5.5 Financial documents such as financial statements and other accounting information which include A. Cash receipts and disbursement books. B. Subsidiary ledgers of accounts payable and accounts receivable. C. Check records. And D. Bank reconciliation records. Section 4.5.6 Charts and codes of account, general and subsidiary ledgers, general journal, accounting instruction manuals, and systems and program documentation that describes the accounting system used by the importer, and 4.5.7 whenever applicable, information or records as described in section 4.5.1 to 4.5.6 of this order that are electronically recorded or stored.
Section 5 Post-Clearance Audit. Section 5.1 Composition of Post-Clearance Audit Group. The Post-Clearance Audit Group is headed by an Assistant Commissioner who shall exercise direct supervision and control in the management of the following operating units of Post-Clearance Audit Group: A. Trade Information and Risk Analysis Office, and B. Compliance Assessment Office. Post-Clearance Audit Group Trade Information and Risk Analysis Office and Post-Clearance Audit Group Compliance Assessment Office shall each be headed by a director. Section 5.2 Authority of the Commissioner to reorganize Post-Clearance Audit Group. The Commissioner, with approval of the Secretary of Finance, is hereby authorized to determine the number of personnel requirements of Post-Clearance Audit Group and issue the necessary order to reassign the required organic personnel of Bureau of Customs to the group. Subject to the principles of economy, efficiency, and effectiveness, the Commissioner is likewise authorized to further recommend necessary changes to the personnel and staffing pattern of the post-clearance audit group, and with the approval of the Secretary of Finance, submit the same for evaluation of the Department of Budget and Management or DPPI. Section 5.2 Authority of the Commissioner to reorganize post-clearance audit group. The Commissioner, with the approval of the Secretary of Finance, is hereby authorized to determine the number of personnel requirements of post-clearance audit group and issue the necessary order to reassign the required organic personnel of Bureau of Customs to the group. Subject to the principles of economy, efficiency, and effectiveness, the Commissioner is likewise authorized to further recommend necessary changes to the personnel and staffing pattern of the post-clearance audit group, and with the approval of the Secretary of Finance, submit the same for evaluation of the Department of Budget and Management or DPPI. Section 5.3 Functions of Post-Clearance Audit Group. The Post-Clearance Audit Group is mandated to conduct, within 3 years from the date of final payment of duties and taxes or customs clearance, an audit examination, inspection, verification, and investigation of records pertaining to any goods declaration, which shall include statements, declarations, documents, and electronically generated or machine-readable data for the purpose of ascertaining the correctness of the goods declaration and determining the liability of the importer for duties, taxes, and other charges, including any fine or penalty. The Post-Clearance Audit Group Trade Information and Risk Analysis Office shall perform the following functions: A. Review available trade data to determine compliance markers of industry or other means of data groupings and set benchmarks for the purpose of developing an audit program for the Commissioner's approval. B. In coordination with the Management Information System and Technology Group, develop a computer-aided risk-based management system, the parameters of which are to be based on objective and quantifiable data subject to the approval of the Secretary of Finance upon recommendation of the Commissioner for use in the profiling and identification of the potential priority audit candidates based on the approved audit program. C. Recommend for approval of the Commissioner of Customs the potential priority audit candidates. D. Develop policies, guidelines, manuals, and standard operating procedures relating to the audit process. And E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order and as may be provided by law. The Post-Clearance Audit Group Compliance Assessment Office shall perform the following functions: A. Prepare the audit work plan, scope, and approach for the approved priority audit candidates. B. Conduct the audit examination, inspection, verification, or investigation of records subject to applicable laws, approved policies, guidelines, manuals, and standard operating procedures. C. Prepare and submit the required records on audit findings and recommendations to the Commissioner of Customs for approval. D. Establish and maintain a customs compliance program. And E. Perform such other functions as may be necessary or incidental in carrying into effect the provisions of this order and as may be provided by law. Section 5.4 Scope of Audit. The Bureau shall develop a computer-aided risk-based management system, the parameters of which are to be based on objective and quantifiable data to be approved by the Secretary of Finance upon recommendation of the Commissioner of Customs. Section 5.4.1 Post-clearance audit of importers shall be undertaken when firms are selected based on any but not limited to the following criteria: A. Relative magnitude of customs revenue to be generated from the firm. B. The rates of duties of the firm's imports. C. The compliance track records of the firm. D. An assessment of the risk to revenue of the firm's import activities. E. The compliance level of a trade sector. And F. Non-renewal of an importer's customs accreditation. Section 5.4.2 Customs brokers and importers, duly authorized agents, may be audited to validate information provided by their importer clients and fill information gaps revealed during the audit. Section 5.4.3 The Commissioner may authorize the conduct of compliance audit of importers, locators, specific group of importers, or other parties engaged in the customs clearance process as he may deem necessary. For this purpose, the Management Information System and Technology Group, in coordination with the Post-Clearance Audit Group, Trade Information and Risk Analysis Office, shall develop the computer-aided risk-based management system to facilitate the risk assessment and conduct of audit. The Post-Clearance Audit Group shall gather data or information from other offices and organizations to set the risk parameters for audit.
5.5 Conduct of Post-Clearance Audit. The Post-Clearance Audit Group shall prepare a set of post-clearance audit procedures for approval by the Commissioner to strictly govern the audit to achieve the highest level of objectivity, fairness, efficiency, and transparency. The guidelines shall include the following procedural or operational concerns. A. Profiling or information analysis. The Post-Clearance Audit Group Trade Information and Risk Analysis Office shall perform risk profiling analysis activities on the importers. This includes data gathering and evaluation of import and export operations. B. Audit notification. The Commissioner shall issue an audit notification letter or ANL to the company identified for audit. The ANL shall contain the name or names of the authorized customs personnel from the Post-Clearance Audit Group Compliance Assessment Office to perform post-clearance audit. It shall be valid for 30 calendar days from the date of issuance, subject to revalidation by the Assistant Commissioner for another 30 days prior to its expiry, and must be served to the importer through any of the following modes of service. 1. By personal service at the principal place of business. 2. By registered mail. Or 3. Through electronic notice sent to the registered official electronic mail address during its validity. Failure to serve ANL within the period without proper justification shall make the customs personnel in charge administratively liable. C. Audit plan. The audit team shall prepare an audit plan to fit the circumstances of the audited company and meet the specific audit objectives in the most expeditious and transparent manner. D. Conduct of audit proper. The audit team shall commence the audit proper not later than 60 calendar days from the service of the ANL in case the importer manifests his intention to avail of the PDP. The conduct of the audit proper shall be deferred subject to the provisions of Section 6.1.2 of this order. The audit proper shall take place when the audit team actually conducts examination, inspection, verification, and investigation of accounting and financial records and goods declaration and other records being kept and maintained by the importer. The audit team may require the presentation of the original of the certified true copies of the documents submitted for verification of its authenticity. A copy of any document certified by or on behalf of the importer is admissible in evidence in all courts as if it were the original copy. The audit shall be completed within 120 calendar days per year of audit period from the date the importer receives the ANL. For this purpose, the audit is considered completed when the final audit report with demand letter or post-clearance audit group clean report of findings has been submitted by the audit team, endorsed by the Assistant Commissioner, and subsequently approved by the Commissioner. The issuance of the post-clearance audit group clean report of findings shall be deemed as proof that the importer or entity subject of audit has been found to have no deficiency in duties, taxes, and other charges, and that the importer is compliant with its obligation to keep records as required by law. If the audit team would be unable to submit the final audit report within the required period, a status report must be submitted to the Commissioner through the Assistant Commissioner not later than 5 calendar days prior to expiration of the said period, giving the reasons for the non-completion of the audit and the proposed period to complete the audit not exceeding 30 calendar days. E. Service of demand letter for payment of deficiency. Within 5 calendar days from the receipt of the demand letter signed by the Commissioner, the Post Clearance Audit Group shall send the same to the importer through any of the following modes of service: 1. By personal service at the principal place of business; 2. By registered mail; or 3. Through electronic notice sent to the registered official electronic mail address with a demand to pay not later than 15 calendar days from the receipt. For requests for reinvestigation, the importer shall submit all relevant supporting documents in support thereof within 30 days from the date of filing, otherwise the request shall be denied. The Bureau through the Post-Clearance Audit Group shall have 60 calendar days from the submission of complete documents to resolve the request. F. Reconsideration or reinvestigation on audit findings. The importer adversely affected by the deficiency assessment issued by the Post-Clearance Audit Group and approved by the Commissioner may file a request for reconsideration or reinvestigation to the Commissioner within 15 days from the receipt of the demand letter. G. Acknowledgement letter. Upon payment of the amount demanded, the Bureau shall immediately issue without a need for request from the importer a letter acknowledging receipt of the payment made by the importer and with a statement that the audit is completed. H. Reporting to Department of Finance and Bureau of Internal Revenue. The Bureau shall furnish the DOF and the BAR a copy of the final audit results within 30 calendar days from the issuance thereof, including the amount paid by the importer. In addition, the Bureau shall provide a quarterly status report to the DOF of all A&L issued and audits conducted. Nothing in this section shall be construed as restricting or calling into question the right of the Bureau through the Post-Clearance Audit Group to satisfy itself as to the truth or accuracy of any statement, document, or declaration presented for customs valuation purposes, and as may be necessary for the purpose of collecting the proper duties and taxes and to determine compliance with the government rules and regulations. 5.6. Access to records. The importer shall give to the Bureau personnel authorized to conduct the audit full and free access to the premises where the records are kept, or provide full and free access to a cloud-based data room or a private server or other devices to conduct the audit. This may include access to records showing the importer's A. Document flow. B. Financial flow. C. Goods inventory. And D. Other business processes necessary or relevant in determining the adequacy and integrity of the manual or electronic system or systems by which such records are created and stored, and compliance with laws, rules, and regulation, particularly in relation to customs valuation, tariff classification, country of origin, and compliance with regulatory requirements with the end in view of collecting the proper duties and taxes. Customs broker and the importer's duly authorized agents acting on behalf of the importer at any stage of the customs clearance process are likewise required to give authorized Bureau personnel under the Post-Clearance Audit Group full and free access to records covering transactions for purposes of validation and to fill information gaps revealed during the audit of their importer clients. In addition, the authorized customs officer may require the importer and customs broker to submit certified copies of any such documents or extracts thereof. The customs officer shall present written evidence of his authority. The person in charge of the premises must provide the officer with all reasonable facilities and assistance for the effective exercise of the officer's authority under this section. 5.7 Documents written in a foreign language. Where a document in a foreign language is presented to a customs officer in relation to the carrying out of any duty or the exercise of any power of the Bureau of Customs, said document must be accompanied with a translation in English, certified correct under oath by a translator accredited by the Department of Foreign Affairs or by the relevant foreign embassy or consular office. 5.8 Power of the Commissioner to obtain information and issue summons. For the effective implementation of the post clearance audit functions of the Bureau, the Commissioner is hereby authorized to obtained on a regular basis from any person, in addition to the person who is the subject of a post clearance audit or investigation, or from any office or officer of the national and local governments, government agencies, and instrumentalities, including the Bangko Sentral ng Pilipinas and government owned and controlled corporations, any information such as costs and volume of production, receipts or sales, and gross income of taxpayers, and the names, addresses, and financial statements of corporations, regional operating headquarters of multinational companies, joint accounts, associations, joint ventures or consortia, and registered partnerships and their members, whose business operation or activities are directly or indirectly involved in the importation or exportation of imported goods or products manufactured from imported component materials. Summon the person liable for duties and taxes or required to file goods declaration, or any officer or employee of such person, or any person having possession, custody, or care of the books of accounts and other accounting records containing entries relating to the business of the person liable for duties and taxes, or any other person to appear before the Commissioner or the duly authorized representative at the time and place specified in the summons, and to produce such books, papers, records, or other data, and to give testimony. Take such testimony of the person concerned under oath as may be relevant or material to such inquiry, or obtain information from banks or other financial institutions on commercial documents and records pertaining specifically to payments relevant to import transaction. The provisions of the foregoing paragraphs notwithstanding, nothing in this section shall be construed as granting the Commissioner the authority to inquire into bank deposits of persons or entities mentioned in this order.
Section 6 Prior Disclosure Program. 6.1 Who may avail of the Prior Disclosure Program? 6.1.1 An importer, without waiting for the issuance of an audit notification letter, may avail of the Prior Disclosure Program by A. Submitting the duly accomplished application form prescribed by the Bureau for prior disclosure stating the errors in goods declaration, and B. Tendering payment for the deficiency, duties, taxes, and penalties, if applicable. 6.1.2 Any importer who has received an audit notification letter may still avail of the prior disclosure program by submitting the duly accomplished application form prescribed by the Bureau for prior disclosure stating the errors in goods declaration and tendering payment of the deficiency, duties, taxes, and penalties within a period of 90 calendar days from the receipt of the audit notification letter. The importer may amend the prior disclosure program application and pay additional deficiency duties, taxes, and penalties within an additional non-extendable period of 30 calendar days from the filing of the prior disclosure program application form, should there be any adjustments to the original application or new issues discovered that need to be disclosed. 6.2 Exclusions from the prior disclosure program. The following shall not be qualified for the prior disclosure program. 6.2.1 Goods declaration which are the subject of pending cases with any other customs office. 6.2.2 Goods declaration which are covered by cases already filed and pending in courts. And 6.2.3 Goods declarations involving fraud as defined under Section 10.3.2 of this order. 6.3 Effects of prior disclosure program. Instead of the penalties provided in Section 10.3.1, the following penalties shall be imposed on approved applications for prior disclosure program in conformity with Section 104 and 108 of the CNTA. 6.3.1 For a prior disclosure program, applicant who has not yet received an audit notification letter, payment of the deficiency in duties and taxes due plus legal interest as provided in Section 7. 6.3.2 For a prior disclosure program applicant who has received an audit notification letter and availed of the program pursuant to Sections 6.1.2, payment of the deficiency in duties and taxes due plus a penalty of 10% of the basic deficiency and legal interest as provided in Section 7, or 6.3.3 For a prior disclosure program applicant who has made disclosures on royalties and other proceeds of any subsequent resale, disposal, or use of the imported goods that accrues directly or indirectly to the seller, or any subsequent adjustment to the price paid or payable, payment of the deficiency in duties and taxes due without penalty and interest, provided that the applicant files for prior disclosure program within 30 calendar days from the date of payment or accrual of subsequent proceeds to the seller, directly or indirectly, or from the date the adjustment to the price paid or payable is made. Upon failure to pay within 30 calendar days, the disclosure shall be subject to Section 6.3.1 or 6.3.2 of this order. 6.4 Verification and action on the application for prior disclosure program. 6.4.1 The post-clearance audit group shall verify the completeness of the post-prior disclosure program application form, including payment made and other supporting documents. Failure to comply with the necessary documentation shall result in the non-acceptance or disapproval of the application. 6.4.2 The audit team shall then verify the accuracy of the deficiency, duties, and tax computation and determine if all errors are fully disclosed. The verification and approval or denial of the prior disclosure program application shall be completed within the period of 90 calendar days from the submission of the complete prior disclosure program documents. 6.4.3 In relation to the specific goods declaration subject of the prior disclosure application, when there are findings of fraud or when there are other material inaccuracies, mistakes, or errors in the goods declaration or outright violations committed that are not the subject of the disclosure but has an adverse impact on government revenues, post-clearance audit group shall recommend to the Commissioner the conduct of a formal and full audit. 6.4.4 In all cases, The tender of payment shall be accepted by the Bureau to be applied to the deficiencies in duties and taxes, including penalties, interest, fine, or surcharge, as voluntarily disclosed, regardless of whether the prior disclosure application is approved or denied by the Commissioner. Any request for a waiver of penalties, interest, fine, or surcharge made by the importer shall be subject to the final approval of the Secretary of Finance. Section 7. Interest on deficiency duties, taxes, and other charges plus fine or penalty. An interest of 20% per annum counted from the date of final assessment as provided under Section 429 of the CMTA shall be imposed on 7.1 prior disclosure program availment, 7.2 deficiency duties, taxes, and other charges, and 7.3 fine or penalty if any. Section 8. Remedies of the importer. When the request for reconsideration or reinvestigation is denied by the Commissioner as provided in Section 5.5.1f, in whole or in part, the importer may appeal such denial to the Court of Tax Appeals within 30 days from receipt of the adverse ruling or decision of the Commissioner.
Section 9. Remedies of the Bureau. The remedies of the Bureau for the collection of import duties, taxes, fees, or charges resulting from the conduct of a post-clearance audit shall be obtained by 9.1 Distraint of goods, chattels, or effects and other personal property of whatever character, including stocks and other securities, debts, credits, bank accounts, and interest in and rights to personal property. Upon the failure of the person owing any delinquent duty, tax, and other charges to pay at the time required, the Commissioner shall seize and distrain the goods, chattel, or effects and the personal property, including stocks and other securities, debts, credits, bank accounts, and interest in and rights to personal property of such persons, in sufficient quantity to satisfy the duty, tax, or other charges, and the expenses of the distraint and the cost of the subsequent sale. To safeguard the interests of the government, the Commissioner may place under constructive distraint the property of a delinquent importer who, in the opinion of the Commissioner, is retiring from any business subject to duty and tax, or is intending to leave the Philippines or to remove the property therefrom, or to hide or conceal the property, or to perform any act tending to obstruct the proceedings for collecting the duty and tax due or which may be due. 9.2 Levy upon real property and interest in rights to real property. After the expiration of the period within which to pay the duty, tax, and other charges, as prescribed in this section, real property may be levied upon before, simultaneously, or after the distraint of personal property belonging to the importer. To this end, the Commissioner or duly authorized representative shall prepare an authenticated certificate showing the name of the importer and the amount of the duty and tax and penalty due. The certificate shall operate with the force of a legal execution throughout the Philippines. 9.3 Civil or criminal action. Any or all of these remedies may be pursued at the discretion of the Bureau, provided that the remedies of distraint and levy shall not be allowed when the amount of duties and taxes, excluding interest and penalties, involved is not more than 10,000 pesos. Section 10. administrative and criminal offenses. 10.1 Failure to keep records. The following penalties are imposable to those who fail to keep and maintain the prescribed records. 10.1.1 Suspension or cancellation of accreditation as importer or broker with the Bureau. 10.1.2 Surcharge of 20% on the dutiable value of the goods which is the subject of the importation for which no records were kept and maintained. 10.1.3 Hold delivery or release of subsequent imported articles to answer for the fine and any revised assessment. 10.1.4 Criminal prosecution punishable with imprisonment of not less than 3 years and 1 day but not more than 6 years and or a fine of 1 million pesos. 10.1.5 Waiver of the right to contest the result of the audit based on records kept by the Bureau. 10.2 Failure or refusal to give full and free access. The following penalties are imposable to those who deny the authorized customs officer full and free access to the records required to be kept and maintained. 10.2.1 Suspension or cancellation of accreditation as an importer or broker with the Bureau. 10.2.2 Punishment for contempt, for contumacy, or for refusal to provide access from the proper court having criminal jurisdiction over the matter. 10.2.3 Reassessment of the importations subject of audit, the declared transaction value being presumed inaccurate, applying therein the correct valuation method. Tariff classification, quantity and/or country of origin as applicable based on available data. 10.2.4 Surcharge of 20% on the dutiable value of the goods which is the subject of the importation for which no records were kept and maintained. 10.2.5 Hold delivery or release of subsequent imported articles to answer for the fine and any revised assessment. And 10.2.6 Criminal prosecution punishable with imprisonment of not less than 3 years and 1 day, but not more than 6 years, and/or a fine of 1 million pesos. 10.3 Failure to pay correct duties and taxes on imported goods. Any person who, after being subjected to post-clearance audit and examination, is found to have incurred deficiencies in duties and taxes paid for imported goods shall be penalized according to 2 degrees of culpability, subject to any mitigating, aggravating, or extraordinary factors that are clearly established by available evidence as described hereunder. 10.3.1 Negligence. When a deficiency results from an offender's failure through an act or acts of omission or commission to exercise reasonable care and competence in ensuring that a statement made is correct, the offender shall be charged for committing negligence, and if found guilty shall be penalized with a fine equivalent to 125% of the revenue lost, provided that, subject to Section 108, Chapter 2, Title 1 of the CMTA, a penalty of 25% of the revenue lost shall be imposed on an inadvertent error amounting to simple negligence. 10.3.2 Fraud. When the material false statement or act in connection with the transaction was committed or omitted knowingly, voluntarily, and intentionally as established by clear and convincing evidence, the offender who is charged for committing fraud and is found guilty thereof shall be penalized with a fine equivalent to 6 times of the revenue lost and/or imprisonment of not less than 2 years but not more than 8 years.
Section 11. Records to be kept by the Bureau. The PCAG shall keep a database of importer and customs broker profiles which shall include a record of audit results and the following information and papers: articles of incorporation, the company structure which shall include but not limited to incorporators and board of directors, key officers, organizational structure. Key importations, importation privileges enjoyed, record of violations and penalties, infringements committed, instances of prohibited importation, instances of smuggling, instances of technical smuggling, misdeclaration, misclassification, and undervaluation. Risk categories, audit results, and other information and documents from the various offices of the Bureau that may be necessary in order to facilitate the conduct of post-clearance audit. Section 12. Audit, monitoring, and record keeping. The PCAG, in coordination with the MISTG, shall establish and maintain a real-time case monitoring and control system to ensure that all tasks related to audit operations are completed on time and that approved audit recommendations are properly implemented. For this purpose, PCAG shall maintain a secure database of all audit results and records. Section 13. Periodic review. Unless otherwise provided, this order shall be reviewed every 3 years and be amended or revised as necessary. Section 14. Turnover of records. The DOF-FAIU, or Financial Analytics and Intelligence Unit, formerly known as DOF-FIU, Fiscal Intelligence Unit, shall turn over all files and documents including any pending post-clearance audits to the BOC-PCAG. Section 15. Repealing Clause. Department Order Numbers 11-2014, 14-2014, 44-2014, and 33-2015 issued by the DOF, CAO numbers 2-99, 5-2001, 4-2004, 5-2007, 3-2015, and all other orders, memoranda, circulars, or parts thereof, which are inconsistent with this order are hereby deemed repealed and/or modified accordingly. Section 16. Separability Clause. If any part of this order is declared unconstitutional or contrary to existing laws, the other parts not so declared shall remain in full force and effect. Section 17. Effectivity. This order shall take effect 30 calendar days after its publication at the Official Gazette or a newspaper of national circulation. The Office of National Administrative Register of the UP Law Center shall be provided 3 certified copies of this order.